What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY, the Nasdaq, the QQQs, and Tesla, and break down the possibility of the market crashing, kind of point it out for you guys and paint out how this could actually look over the next couple of months. And before I break anything down about this, before I go over the possible crash that's most likely coming, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks plus free level 2 data. It's a limited time offer. The offer ends in just 3 weeks. Check it out before they run out. With that out of the way, let's get on with the video. So when it comes to the overall market, SPY closed at about $386 a share, and overall this thing is down over 1.41%. But right off the bat, you guys could probably notice that from a more like macro perspective, we're actually seeing a possible head and shoulders development. Now, I actually have my Fibonacci over the chart. I know it looks kind of complicated, but this is actually very simple. You could see that we actually bounced very close to where the 0.618 retracement happens to be from the very bottom in October going into the high that we recently made. And this is actually where the 0.618 retracement was from this high. And also we could be forming another like retest of it very, very soon. So what this is telling me essentially is the market might actually end up coming all the way down to this level, all the way down for SPY to about 374. I also believe there's a gap down here. Let me just double check to see what the gap is. And once again, I think the gap is like still unfilled down here. It's somewhere here. Yeah, I think this gap right here is actually unfilled around this like 377 area. So there's a good chance we might come all the way down there. But the real question is, are we about to just crash, straight up just crash? And I think it's not going to play out that way. I think what's going to happen is a lot of the 0 day to expiration options are leading to some crazy volatility in the markets. It's actually turning the market into almost a casino in a way, maybe an even bigger casino than before. And what's happening is, as people are just piling into these options with very short expirations, the market makers don't have enough time to hedge. We also see crazy buying of these different options in very short periods of time. This is actually leading to some crazy volatility. And this could even trigger a massive crash in just one day. It's almost like a short squeeze in the opposite direction to the downside, right? That's very possible thanks to how market makers hedge. But when you think about the options chain, you also have to remember the fact that market makers are competing with different investors, and they have a tendency of actually moving stocks to cause pain for them. So when doing so, it's very likely they may try the same thing. And what I found very suspicious that just happened was Joe Biden was speaking, and he said he's confident that the next inflationary report is going to be a good one. It's not going to be bad. He's confident it's going to show inflation in a good place. So it makes me wonder, could he have just slipped up? Or could it be that the CPI, aka the CPI, whatever you want to call it, because CPI does have a tendency of being very manipulated, could be a little low? Could they try to make it low, or maybe like very like close to expectations, for example? Could that be part of the trap? It's a possibility. And they could be trying to trick people who are trying to short the market very hard. And in doing so, they might actually cause another bounce very soon. Maybe, and this is what I'm actually starting to think. I don't know if I'm going to be right because it depends on CPI. I can't predict CPI, but my guess is, well, Biden's going to have egg on his face if CPI is hot again after he just said he's very confident it's going to be a good report. So I'm wondering, is it going to be higher? I don't really know. But what if right before CPI comes out, I think CPI is coming out on the 14th, so we have the 13th. I think as we get closer to it, the market might end up tanking all the way down to like this very low level, not down there, maybe like around this like the 370s. We might see the market tank again pretty hard as we approach CPI. And then what is this starting to look like? This is starting to look like a left shoulder here, a head here, and we could be forming a right shoulder. So this is completely the opposite of what everyone's thinking. Everyone, or the majority of people, are thinking CPI is going to be super hot. The market is going to crash starting tomorrow. Everyone starts shorting on Monday as they see the market tank like this, right? Then they do the unthinkable and they cause a bounce. We bounce and we rally off a lower than expected CPI, or a very, very flat CPI. It's a possibility, and I'm just saying this hypothetically. I'm not guaranteeing it because I'm going to be hedging either way, and I'm going to be prepared for anything either way, right? Always be prepared for anything if you are a trader or investing in the stock market. But what if we get a bounce, like a crazy bounce like this into the next FOMC meeting, getting everyone so excited? And then the market just rallies and rallies and rallies, and all of a sudden, off this, I don't know if we're going to like come to the exact levels of where the left shoulder happens to be, which is the low like 400s. We could come back to maybe the very low 400s out of nowhere. And then all of a sudden, everyone turns bullish up here. They think, oh, the market already dropped, the drop is over. And then we tank and we get a huge crash because of, I don't know if it's going to be the Fed causing it, going into the FOMC meeting. I don't know if it's going to be something else. I don't know if it's going to be something that involves geopolitical issues. And then we get a massive, massive pullback forming after the right shoulder forms. It just keeps dropping going into like May. We get a huge crash. We could drop to the October lows, maybe go lower to about 330, 320 a share. And we may bottom around May sometime, right? And then we bounce from there and we just kind of go on. But I do believe a possibility like this is very likely. I don't know if we're just going to straight up crash from here as well. That's also a possibility. Maybe we don't even form the right shoulder. That is a possibility, of course, if CPI is very hot, the Fed continues to tighten, and the fear driving the market continues to remain at extreme levels. But the market's super, super fearful right now. Think about it. Are we about to crash when everyone's panicking? Maybe, or maybe not. Maybe they're going to try to trick us one last time. We were hit with some very negative news about what's happening to Silicon Valley Bank, which is the 16th largest bank in the US, and also for the top 20 banks in the US, seeing hundreds of billions, I think over $600 billion in unrealized losses. That's once again very, very, very critical during a time like this. This is the biggest collapse we've seen since 2008. So there's a lot of fear right now. And I'm just thinking, yes, the market's likely going to tank, but are we just going to tank from here? Maybe. Maybe this doesn't happen. Maybe we don't form this giant right shoulder. Maybe we just like crash and we just collapse, right? That's also very possible. Maybe the right shoulder is just super tiny and we just tank from here. Very, very possible. But if I was a market maker, I would try to like pump the market near the very end of March one last time to trick everyone and form another giant like bull trap so that a lot of these shorts could reposition themselves. And this could be caused by CPI being just like maybe meeting expectations. Maybe it just meets expectations and we get this right shoulder forming after a big drop on Monday, right? Very possible. This could complete the left shoulder, the head, and then the right shoulder, and then we just continue to tank later on. But either way, I do see major downside coming because of recessionary fears, because of how fundamentals are looking, because of the fact that CPI is still relatively hot, and because of the fact that the Fed has to continue to tighten. Now, what else helps to contribute to this would be the overall market, basically. Look at how distributive Tesla looks right now, and look at this giant gap, huge, huge, huge gap down to 144. Tesla, in my opinion, if it tries to bounce, it's going to be very small. It's likely going to just keep crashing down to the 140s or even lower than that. Even lower than that, it's very possible. This is going to help drag the market down to some degree, not just Tesla though, but also Apple. If you look at Apple, Apple also looks very distributive. We have a nice gap down here in the 140s. It also has more space to continue to drop. And I do believe that this looks like a giant distribution schematic, like I said, right? Overall looking more and more bearish. JP Morgan did get a rebound after a huge crash from 144 all the way down to 128. Huge crash. It's trying to rebound a little bit. But overall, I'm seeing more downside. We have a lot of gaps way down here, even in the low, like hundreds, lots of gaps, not looking too good. Uh, Looking at something else like the triple Q, also not looking that great. What I'm essentially seeing is this thing has been on a very strong downtrend. It actually just barely held 288. That's the support zone I mentioned. It could keep coming down to about 281. That's a real possibility. But I don't know if we're going to try to bounce first and continue to crash. It doesn't matter to me because overall, this is looking very, very bearish. It looks even more bearish than SPY. Uh, SPY does have some potential to try to bounce, whereas the triple Q does not have the same potential or as much potential. I think it can try, but overall, it looks like it's going to come all the way down to these lows, all the way down below 270. I see a lot of downside. Now, another thing I want to check on SPY, though, is do we have a divergence? I didn't actually check this. I'm going to just hide the drawings so you're not distracted, and let's look at some technicals. Oops. RSI, I also have my MACD. And you will notice that we actually have a bullish divergence on SPY. And I have a feeling this might end up playing out. I don't know for sure, of course, but it's a possibility. Because notice how, yes, we're down here. SPY is making a higher low compared to this low right here. The low is 374 here. The new low is currently at around like 284. And we do have some space to continue dropping, of course, but I'm just noting that we so far have a higher low. But look at the RSI. The RSI back then was in the 40s, high 30s, 40s, 39, 42, 46. RSI is currently at 35. The RSI is lower, right? This is a divergence that's forming. It makes me wonder, are we about to form kind of like a giant head and shoulders where we see this thing drop down back to these levels, but the RSI is super oversold, but the overall chart is at a very similar place. And then we get a bounce thanks to the bullish divergence. Maybe the bounce forms because of CPI. Who knows? If you want to call it CPI, you could call it that too, before we do see a bearish continuation. So what am I essentially seeing? I'm seeing the market coming down a little more, all the way down to fill this gap in the 370s. I do think we're going to see the 370s get touched, maybe on Monday. But the market is extremely fearful. It makes me think this is a good opportunity for market makers, for institutions to trick retail, to trick everyone, and then we bounce off CPI when everyone, like nobody expects it, trap all these shorts, make them panic, make them bleed, watch the market rally. Then the market rallies, maybe lots of shorts want to reposition, maybe they try to trick everyone and they end up, tricking people to turn bullish as the market rallies, and then we collapse like after that later on because of the Fed or some other factors. But once again, we could see something like this. I think it's very possible. I don't know how big this rebound is going to be. Maybe it's going to be very minor, maybe not. But I could see us trying to rebound. It is very possible. Am I promising this? The answer is not necessarily. Do I think this is possible? Yes. And this is what I'm essentially forecasting for the time being. This all could change if CPI ends up actually being hot. If CPI is hot, we could just crash from here, guys. We might not even get this big rebound. But if CPI ends up coming as expected, it is a possibility, just as Joe Biden said it will. We'll just have to wait and see. Anyways, thank you all so much for listening. I hope this was as clear as possible. I just wanted to share this perspective with you guys. I drew out this potential bottom based off the fib levels. I don't want to throw way too many lines at you. A fake break above the previous resistance would also be a very good bull trap. And then we just continue from there. All right. Thank you all for listening. Have a great day. Remain calm, cool, and collected. And I'll see you guys in the next one. The market to the moon because the long-term future is still incredibly bright. And peace out.